Hi everyone, Kate Callan over here from the Australian Chamber of Commerce in Korea. On behalf of AustCham Korea, it's my pleasure to welcome you to our latest webinar, the Australian Federal Budget, Insights from ANZ Chief Economist. Now, as the webinar title gives away, we have a very distinguished guest joining us for today's session, Mr. Richard Yetsenga, Chief Economist at ANZ, to discuss the contents and implications of the newly released Australian Federal Budget. Now, given the unusual challenges of 2020, the federal budget has significant implications for businesses and individuals both back home in Australia and around the globe. As such, we're very pleased to be joined by such a diverse audience today, including members of AustCham Greater China, AustCham Korea, AustCham Laos, the Australian New Zealand Chamber of Commerce in Japan, and the Australian New Zealand Chamber of Commerce in the Philippines. We hope that all of you enjoyed today's session and encourage you to ask questions using the Q&A button at the bottom of your screens. But without further ado, it's my pleasure to welcome the moderator of today's webinar, AustCham Korea's chairman and the CEO of ANZ in Korea, Chris Rosidi. Chris?
Thanks, Kate. And as Kate said, my name is Chris Rosidi. I'm the chairman of the Chamber in Korea and also ANZ's representative here in Korea. Richard is actually quite well known to many of the members and participants on today's call. He's a regular presenter across the chambers in the region. He's also an extremely well-regarded economist within Australia and regionally. I'd like to thank him for joining, but also thank all the various members from across the chambers that have joined today. It's actually great to see participation from such a diverse number of chambers. Richard will be providing initially an opening address around the budget and its implications, but we will have some time for Q&A at the end. So I do encourage people to provide any Q&A that they'd like to see addressed, and we'll try and get to it if we can. Without further ado, I'll hand to Richard to open today's proceedings. Thank you.
Fantastic. Thanks, Chris and Kate. And it doesn't matter how long I do this job, I'll never get used to people talking about me while I'm still in the room. So thank you for the invitation. And I know a few chambers have joined today. I wish I was seeing you in person. I obviously haven't seen any of you over the course of 2020. ANZ has a long and deep history in all of the markets that you're dialing in from, and we're committed to a strong international footprint, which allows us to really focus on trade and capital flows in Asia, and that's a commitment that we intend to stick with for the long term. And I'm thankful that I have a research team based in Asia that I can call on, and that has been producing some great research through what's been a really complicated year, of course, in 2020. The budget has a lot of detail. It's about 1,000 pages. You will ask questions which I can't necessarily answer, but we'll work through ANZ to see if we can help you out. Let me start with, the budget and how might we assess it in a shorthand kind of way. And look, I think three things are worthy of discussion. One is, what does it do for the recovery? The second thing is, what does it do for the structural reform agenda? And the third thing is, what does it do for outcomes or distributional outcomes or equity? And maybe if I can summarize each of those in kind of dietary terms, lots of sugar, not much protein. There's a bit, but not a lot. And shame if you rely on school lunches for your sustenance, because there's not much in there for the equity outcomes, I don't think. And let me talk about all of those, I guess, kind of one after the other. Clearly, where we have come through very challenging conditions, I think Australia's in the midst of a recovery. I think much of the region is in the midst of a recovery. And in fact, I think even in places like the US, where the news on COVID doesn't seem to be good at all, I think the US is in the midst of an economic recovery as well. The budget's key task, I think, in the short term was to reinforce that recovery. In that sense, I think it does that. Around $100 billion in new measures, including the bring forward of personal income tax cuts. The budget deficit is over $200 billion to indicate the size of economic stimulus. There's a range of support for incomes, employment and business. I think if the first task of the budget was Australia's 3 decades of uninterrupted economic growth has gone, the budget surplus has gone, don't muck up the recovery, I think the budget has submitted to that task. Also, I mean, in the context of our forecasts, we've started to forecast a bit differently. We used to do our economic forecasts on the basis of our forecasts about what the Reserve Bank would do on monetary policy, but largely assumed fiscal policy was as per the last budget. With more fiscal policy influence, we've started to shift that. We now start to try and be forward-looking on fiscal policy, and a lot of kind of the sense of fiscal easing that we thought would come through broadly was delivered. There is, the timing was maybe a bit different, particularly in the fourth quarter, but broadly we're okay with that. So it fits with our forecasts of continued recovery in Australia. The second aspect was the structural challenges. The government has made some progress. I'm not saying they haven't made any progress in this budget, but it clearly hasn't been the centrepiece, and it clearly hasn't been the lion's share of what's happened. There's a generous business investment allowance. One of the problems with investment allowances, if they're too generous, is that businesses think they're temporary and they do lots of stuff which might not actually add to productive capacity but just involve spending. But let's put that to the side. There is a business investment allowance. There was a previous cut to R&D tax concessions, which has been undone. There's a grant to encourage advanced manufacturing, some funding for higher education and skills, and a few other things. The bulk of the money, the financial aspect of the budget on that kind of structural reform piece, though, really is that investment allowance, and that's been something which the government has played up quite a lot. And on the equity side, look, cementing the recovery and getting people back into work is the number one thing you can do for distributional outcomes in the economy. So let's give the budget some ticks for that. If people were looking for subsequent steps to help the young, for instance, to help women, to help those in certain industries, and in fact, the young and females have been disproportionately impacted by this economic downturn because of the industries in which it's impacted. If you're looking for extra steps to help those groups beyond getting the labour market back to some sort of healthy state, there wasn't a lot in the budget. Lower income earners benefit a bit more from the tax cuts. There's a lot of controversy about how you assess tax cuts from an equity perspective, but we think that younger people and those on lower incomes do a bit better. The government's made permanent the low income tax offset. There's a JobMaker hiring credit wage subsidy for employing young people. There's some help for social housing. It's not fantastic, but it's definitely there. So there's a few things there on that equity piece. But in order, you would say hit the targets on ensuring the recovery. Yes, there's some stuff on the structural agenda. There's a little bit on equity, but really in decreasing level of outcomes, I think you'd probably go down the scale in that sense. Also, if you thought this budget was a really big deal and you can't remember the last time the budget in Australia was a really big deal, that's absolutely right. I think it has been and is a really big deal, and there's some important reasons for that. And this is not just an Australian kind of outcome, but a regional and, in fact, global outcome. Interest rates are on the floor. For some countries, that happened after the financial crisis 12 years ago. The US happened to get off zero, but is now back there. Europe is there. Virtually, well, I think every advanced economy is there, and even emerging markets are at levels of interest rates that we haven't seen, certainly in my lifetime. Monetary policy is effectively tapped out. There are things central banks can do, and they are doing some things, not least to be seen to be part of the policy effort. And because when you have a mandate, it's very hard to say, well, I have no tools, so they're doing some things, but really fiscal leadership has shifted from monetary policy to fiscal policy. Now, that sounds like a thing which would interest economists, and you wonder what it's got to do with you. Actually, it's a really, really big deal. For many of our economies, this is a change in leadership we haven't seen in probably 30 years, and in some places longer. There's a few reasons it's different. One is Monetary policy is administered by a central bank, often with some sort of relatively clearly defined mandate. In other words, the fact it operates largely through an instrument and there's a clear mandate means accountability is pretty clear. Fiscal policy is a whole lot of discrete decisions. What's the target for fiscal policy? The fact that accountability is a bit murkier means you're just likely to get more stimulatory policy. There's going to be much less hesitancy, I think, on the part of fiscal authorities easing than they were on the part of monetary authorities easing. Fiscal policy is probably more effective. Monetary policy works effectively through an intermediary. You change the price of credit, it transmits through people's lending decisions and asset prices and other things, and then it impacts the real economy. Fiscal policy can directly impact the real economy. We go from kind of pushing on a string to a direct injection style of policy, and I think that's quite an important shift. Monetary policy is a blunt instrument. In a sense, that's a good thing because it makes policy transparency much higher. But if you think fiscal policy, by definition, is the outcome of a whole discrete decisions about where to spend, where to tax, where to invest, by definition, those kind of distributional questions about where are you spending, which parts of the economy are benefiting, because you can't do a fiscal easing that benefits the entire economy equally. I just think things like inequality and those distributional questions are just going to become much more prevalent in the policy discussion just because we've switched from monetary policy to fiscal policy. I'm not saying they're all of a sudden important. I think they have been very important, but they're all of a sudden now much harder to hide from, I think, in the policy process. Asset managers are going to have a different life. The volatility in fixed income is now below volatility in foreign exchange, for instance. Hard to see how that changes on any sort of forecastable time horizon. So managing a fixed income portfolio starts to look a lot less interesting than managing other types of portfolios. And even the capability of the public sector, doing the budget once a year probably will no longer cut it. If the budget is the primary mechanism for economic management, there's going to need to be kind of some tools developed that allow quicker adjustment of the fiscal stance. And that's going to involve a change in mindset often in the fiscal authority, which is premised around this kind of once a year kind of story. I spoke about the recovery in Australia being entrenched. Let me talk a little bit more about that and what our forecasts, I guess, have embodied in them. So we have the second quarter this year as the low point in the economic cycle in Australia. GDP fell 6.9%, a big fall. Our first go at second quarter GDP after COVID hit was minus 13%, so we're a lot better than that, but minus 7 is still the largest fall I've seen in my lifetime. We have positive growth in every quarter after that. In the second half of this year, as Victoria has locked down, what we've roughly seen is the impact of that has been roughly offset by additional fiscal stimulus and more policy measures, both in Victoria and at a Commonwealth level, so the federal budget. And importantly also, the lockdowns in Victoria had very little impact on the other states. In the first phase of lockdowns, actually, if we looked, for instance, at our consumer sentiment survey, consumer sentiment in any individual capital city was more impacted by the national COVID case count than by the case count in any individual city. In the second wave, that diminished, and what became more relevant to spending in any individual city was the case count in that city. And I think that makes sense. For the first wave, we had this enormous sense of uncertainty, and then as we've kind of learnt more about COVID and we understand it a bit better, the fear aspect diminished. Certainly nobody's rushing out to buy 50 rolls of toilet paper this time, which is good. The fear aspect diminished and it became a bit more rational about local circumstances. As I said, we'd also factored in more fiscal easing. Probably two things to watch. One is there is still a fiscal hole in the current quarter. There is a big dip in implied fiscal support for the economy. Fingers crossed that's roughly offset by the reopenings in Victoria. So what happens over the next week in Victoria is going to be quite important. to that. The second thing is the government also is banking on a fiscal strategy which moves from direct fiscal support of incomes to incentivising business to get people back to work. That transition needs to work relatively smoothly for there not to be a hiccup in the economy. So they're two things I guess we're watching, and I don't want to say we're worried about them, but they are points of stress. Two other things where the news actually is a little bit is better. One is housing and the other one is the labour market. We thought house prices would be falling. They're not. They're actually, for detached housing, they're rising. For CBD apartments, that's a different market, and I think we can all relate to central business districts are having a very different crisis in economies that have managed COVID quite well than often other parts of the economy as people spend a bit more time at home. But apart from CBD, high density, the property market in Australia is doing quite well. I suspect pretty consistent with where most of you are sitting as well in your local market. And the second issue is the labour market's done quite well. One indicator really not to watch is the unemployment rate, particularly in economies that are doing things with direct income support, because there's measurement issues around whether people are recorded as actively looking for work or not. We're tending to look at the level of employment and the level of unemployment, and the level of employment's actually been rising more strongly than we thought. So even though we have positive growth in GDP in each quarter out the next couple of years, as this recovery, in our view, from COVID continues, there are risks both ways, I suppose, in our forecast, and things that are moving in both directions. Now, the recovery story, I don't think is just an Australian story. In fact, I think it's a global story, as I said at the beginning. A few reasons for that. One is shutdowns were applied outside China and maybe some ancillary economies like Korea, which were kind of the first wave. When COVID hit the rest of the world more impactfully over February and March, a lot of economies shut down quite aggressively in a ham-fisted way, because it wasn't something they'd been used to doing, and it was quite severe. We've had much more disaggregated shutdowns since then, as countries have done it at different times, and they've tended to be much more precise about the degree of shutdown. In fact, they've tended to do it less. So that has meant, as cases have risen in second and third waves, you haven't had the same degree of economic shutdown. We've had generally better virus control. There are exceptions, of course. But Italy and Spain, for instance, up until very recently, I don't think anyone was really concerned about them repeating the problems of the first wave. I mean, hopefully they don't. But generally, virus control has been much better. And of course, in Asia, the outbreaks that we've seen, a lot was learned even from the first wave, even with Asia having done a lot better through the first wave than many advanced economies. And there was continued improvement there. Better treatment and health outcomes. In the US, for instance, in the second wave, the number of infections, daily new COVID cases, was roughly double the first wave, but the number of hospitalizations was roughly half, and the number of deaths was even lower than that, actually. So there's just a treatment improvement that's going on, and people even say things like putting patients on their stomach, using ventilators later, using steroids and other things have really improved. There's less fear, as I spoke about in Australia. Victoria shutting down has had very little impact on the other states. That wouldn't have been the case through the first wave. The global merchandise trade cycle has come back. Of course, trade in people is very compromised, but trade in goods has come back. And in fact, in Asia, trade volumes are above year-ago levels. And the most important thing when thinking about COVID is the economic policy response. Yes, this is the largest global economic downturn any of us have ever seen. It's the largest in 100 years. But the policy response, there is no historical precedent for it. It's the largest, it's the broadest, it uses the broadest range of tools. We have not seen anything like this. And in fact, one of the indicators I spend a bit of time looking at is money supply. You can't have a crisis if money supply is rising. And money supply in most economies, in most advanced economies where we get quick data, rose through February, March and April. In fact, in the US, it rose at double-digit rates. Actually, let me rephrase that. We're having a health crisis. We've had a health crisis and we're climbing out of it, hopefully, and an economic crisis, which we're climbing out of. You can't have a financial crisis if if money supply rises, in my view. And the policy response has been so good, actually, it's done that. In fact, I would posit in some ways the policy response has been too good. I don't know that rising house prices are giving us the best outcomes from this crisis. So I think the calibration of the policy response, perhaps more support for people who've directly lost jobs and businesses that have folded, and perhaps less monetary policy support that seems to have just boosted asset prices. In that sense, look, summary for this is I don't think the equity markets and the credit markets and the currency markets are crazy. We can argue about whether they're at precisely the right level or not, but they've been telling us since April, actually, that a recovery was emerging, and I think they're right. It'll take some ongoing policy support and ongoing calibration of policy to make sure the economic cycle doesn't retrench. But I do think that what we're seeing globally is consistent with policymakers recognising that. And so even if they muck up the management of COVID, I think they'll probably deal with that with more policy stimulus. Chris, I'm going to stop there. I'm happy to start doing some questions if any have come through.
Sure. Thank you, Richard. That was very comprehensive and certainly very positive to hear that there is recovery, in your view, recovery on the cards, both in Australia and underway, I should say, both in Australia, but also regionally and in fact globally. When you look at Australia specifically, and you look at it from a state-by-state basis, how do you see that being distributed, that recovery? Obviously, we can talk more specifically about Victoria, but then more broadly across the country, how do you see that recovery proceeding?
Look, it's been very uneven, and the first criteria for recovery, of course, is dealing with the virus, and clearly on that front, Victoria is the odd person out, unfortunately. So physical movement restrictions in Victoria are still very much in force, certainly in Melbourne. So any activity related to that is well down. If you're a restaurant or a cafe in regional Victoria, you are better off. If you're a restaurant or a cafe in the middle of the Melbourne Central Business District, you've got no business, you're completely shut. So even within Victoria, there are quite important geographic differences. And then once we go beyond that, I mean, New South Wales and Sydney has had more cases than the other states, but also has a lot more people. WA clearly, I guess, is furthest ahead. It's benefited from the very strong commodity prices that we've seen. The government has also added some state-based housing incentives on top of the national incentives. So it's got a very strong housing story. In fact, we're getting increasing anecdotes about skilled labour shortages in Western Australia. And in fact, in New Zealand, there's talk about skilled labour shortages as well. Look, touch wood, Victoria's coming out of its second wave. Touch wood also, it's learned a lot about virus control, and we do a much better job going forwards. So I think some of these internal differences will start to even themselves out. And I'm still hopeful. I don't have a view, but I'm still hopeful that we can get some cross-border travel, at least within Australia, by the end of December.
Thank you. And I guess for many of the members, perhaps expatriates that are living and working overseas, but still have property interests back home in Australia, a number of questions have come through specifically around views around property. I know you've touched on it in your earlier presentation, but interested in a little bit more detail around where you see property going over both the short and medium term. Also, perhaps related to that is some of the government policies that have exist, for example, for foreign buyers. Do you see any of those policies changing as part of this budget or in response to, I guess, economic recovery efforts going forward?
Yeah, thanks. Yeah, we haven't done a good job on calling the housing market. As I said, we'd expected it to be much weaker. It hasn't been. Certainly, you can still make a case which says it should be weak. No cross-border immigration, so lower population growth. Young people who've lost their jobs moving out of being voluntarily away from home, moving back home. Airbnb, for instance, certainly through the middle part of the year, finding it much more difficult to rent properties. So those Airbnb or short-term rental properties coming onto the long-term rental market. The pre-sales you need for big apartment blocks being much more difficult. So that construction. So all of those things are still there, but prices are going up in large part. Certainly, I think part of it is a distributional issue that we missed. More than 50% of mortgage lending every month comes from what we call upsizers. So people like me who already own a house who are looking to borrow something a bit more to go on to bigger and better things. The borrowing sectors that have been hit most intently by this pandemic is particularly first home buyers, and they're in a slightly different segment of the market. So what you've probably seen is more stratification of the market. Dwellings at the lower price end probably aren't doing very much, might even be going down. And then dwellings that I might want to move into because instead of spending money going to Europe, I've got a bit of extra cash, or I'm working even more intently from home and I actually realise I need a bit more space. When I say need, that's an Australian need, so I want a bit more space. We have, I think, the biggest houses in the world in Australia, maybe next to the US. So all of those things, I think we miss that nuance of the detail. The other aspect is housing is the largest single asset pool for the household sector. If you want to sustain consumption, it's going to be very hard to do that if house prices are falling. So house prices, unfortunately, remain a really important, I don't want to say policy target, but they kind of are. And I think that's a problem for the kind of equitable distribution of housing. We're not making it any easier for our young people to access housing. We're making it the decisions for older people to downsize even more complicated. So in that sense, look, there's no talk about changing the foreign access rules to property in Australia. I can't see the preconditions personally for that happening. I think as we get through the worst of this COVID crisis, one of the issues we'll turn back to is what are we going to do about housing affordability?
Yeah, thank you. Very, very good response. I guess when you look specifically at Victoria, it's had the most significant and most stringent lockdown out of all of the states. It's still subject to elements of it at the moment. Do you see, using Victoria as an example, do you see permanent changes to the economy as a result of such a prolonged lockdown? Or do you think the recovery will restore things to a pre-COVID normal? And perhaps maybe building on that, what is the post-COVID normal given what we've been through?
Yeah, post-COVID normal, business unusual, maybe. Look, probably neither. I think when Australia went into lockdown, the government started using this terminology of hibernation. I think the thinking process was the lockdown will be severe but temporary. We'll deal with COVID. We don't want businesses evaporating and jobs disappearing that actually would just need to be rehired and recreated afterwards. So we'll provide all this income support. We'll defer insolvent trading laws. We'll make it much harder for businesses to go bankrupt. A lot of countries did the same, particularly as well as in Asia. And so then when we wake up the economy, the big, huge grizzly can just get up out of its cave and we'll go back to life before. Now, clearly, as this has gone on, we've realised that's not going to happen. I mean, COVID's not disappearing. Even when we have a vaccine, social distancing will still be an issue. We're not going to be packing the A380 like we did before and travelling all over the place. Just human-to-human contact will be different. And to my mind, that's the issue. So the policy response, I think, has done a good job at protecting businesses as a result of lockdowns. But it's as we come out the other side and realise the world's not going back to the way it was before. I mean, Chris, if you even think about what ANZ is doing about how we work, a lot of work going into how we think about the nature of work at ANZ, to what extent can you and I collaborate over this medium, to what extent do we need to be in the office? It's all right for us oldies, but what about the young people who learn from listening to us oldies? They want to be in the office, particularly if you live alone. The office is an important part of your social connection. We've got kids and, well, I'm trying to get them out the door, to be honest. So I quite like spending time at home, right? So we're asking all of those questions. I just can't see central business districts going back to the way they were. And in fact, it was only 150 years ago that London put in the tube. That was the start of mass transit to work. Before that, you worked close to your home because travelling was really expensive and really slow. Now, what we started to do was separate work from home, because the work you did was often noisy and smelly, and it often went 24/7, and so you didn't want to live next to it. But why can't I go 5 minutes up the street to a 3-level office building? Why do I need to go 25 minutes into the city to a 30-storey office building? So I think we've really broken the shackles on what work means. In fact, separating work from home penalises the second income earner in the household, because they're the ones who end up going to school or daycare, going to work, trying to do the shopping, trying to get back to school. Whereas if all of those things are much closer together, I think we actually all have better quality of life. I just can't see we just go back to the way things were.
Thank you. And I think also with the budget, you mentioned earlier that there's some specific policies within the budget around the manufacturing sector in Australia. I think in defence, space, medicine, medical, food, beverages, resources, and clean energy. How significant are these policy, inclusions within the budget? Do you see them having the potential to make a significant change to, say, for example, the structure of the Australian economy? How do you assess them?
Yeah, look, crises always change things, but they don't change things overnight. So we shouldn't expect the structure of the economy to be fundamentally different. So I think you're right to call that out. That doesn't mean, though, that the opportunities at the margin are not different, and I think probably they are. And part of that is the government's response. I think the government is trying to think about some of these sectors that it does want to do a bit differently. And certainly I think all countries are and should be thinking about what their supply chains look like. And it's not just because of COVID, but actually what COVID in a sense has revealed. It's really brought into stark relief the fact we are operating in a very different geopolitical environment. Who we can depend on in terms of other countries is quite different from the way the world used to be. In fact, there's an anecdote I quite like to use. In 1985, when President Reagan and Gorbachev met for the first time in person, and this meeting was the beginning of the end of the Cold War, they had an odd discussion apparently during a break in discussions when one of them asked the other, I think it was Gorbachev asked Reagan, if the US was invaded by aliens, would Russia come to their aid? And Russia said they would, and the US agreed they would. Well, the world kind of got invaded by aliens, actually, and countries grew further apart this year. It's not a great sign, really. So I think Australia, like other countries, is looking at that. One of the aspects that I think, to be fair, the jury's out is on the clean energy piece. Unfortunately, in Australia, the climate has very much become the third rail of Australian politics. And it's become heavily contested for all sorts of reasons that aren't always directly related to the substance of the issue. They reflect the historical positions of the parties and the individuals involved. So that's an area I think will remain quite contested for quite a period of time.
Thank you. I've got two questions in terms of slightly related. I guess in terms of different opinions on the budget. And I guess the first one is, what was the opposition's reply to the budget from a critical perspective? And I guess this question in itself is potentially a critical assessment of the budget, in that is the government's policies, or some of the policies that have been incorporated in the budget, lead to propensity to support zombie companies within the economy, i.e. companies that otherwise fail?
Look, we are definitely in a zombie movie. There is no doubt about it, and it's global. In fact, the whole intent of the hibernation strategy was to let the undead live, really, right? And virtually every country's done it. Bankruptcies in most countries are down, and we've been through the worst economic downturn in 100 years. The only way it makes sense is if you just make it much easier for businesses that are insolvent actually to stay afloat. And that's what countries have done. So there is unambiguously, we have decided between productivity and production. We've chosen production. And I mean, a related issue is this idea of kind of getting back to the office. That's favouring production and getting back to the CBD. Unfortunately, one of the ways you advance productivity is the businesses that aren't at the cutting edge, that aren't the most efficient. During downturns, they disappear, and that's absolutely painful for the business owners and the capital owners and the employees particularly. And then more efficient users of that capital and that labour can come in and you get a resource transfer and you improve productivity over time. All countries have done a lot to stymie that process. So we unambiguously have a zombie company problem. You look no further than parts of the investment landscape, private equity companies that big asset managers that would normally look at buying assets during this stage of the cycle. If you speak to them, a lot of them would say there were just no distressed assets to buy. And yet we've been through this enormous downturn. So we have taken a big bet on that. What was the first part of the question, Chris? Sorry. That was the second part about zombie.
Yeah, no, the first part was, I guess, the initial reply, or the reply from...
the reply to the budget. Yeah. 100% honesty, I didn't watch it. Getting through the budget, by that time I'm pretty much done. Look, the two main criticisms of the budget, I think, whether I agree with them or not, one is the degree to which there's a climate aspect to the budget, and the other piece is the extent to which, and I alluded to this in my discussions, the extent to which there was a separate effort to deal with the distributional outcomes in the budget, particularly how this downturn has impacted women and young people. In the discussion afterwards, look, that's what I've picked up as the two issues which people have spoken about.
Okay, and just moving off the budget specifically for a moment, and to trade and interlinkages of economies within this region. Could you talk a little bit about where you see a trade between Australia and regional partners going in, I guess, post as we move forward in this recovery?
Trade is unambiguously more complicated. I think the geopolitical environment has been deteriorating for some time already. As I said, crises always change some things. Some trends they create and some trends they exacerbate. And I think the trend to geopolitical separation they've exacerbated. And it's, in fact, the world is quite strange, right? If you think about the fact we've got probably 100 people on a technology platform, we're more connected than we've ever been in an electronic format. In fact, as hard as it was to believe in, 6 degrees of separation, the idea that I'm connected to everyone in the world through 6 intermediaries, apparently it's fallen to 3.57. I mean, you just think about that alone, it's quite unique. But of course, those connections are through people who tend to hold similar views to ourselves, because that's what our Facebook stream or our Twitter stream or our Instagram stream tends to feed us. That's one aspect which I think has probably conspired to exacerbate lower rates of economic growth, income and wealth and housing inequalities, shifting economic size globally as some large countries get bigger and others shrink in a relative sense. That's also creating a readjustment problem. So those things were being exacerbated, I think, by technology. But COVID's created an extra issue. One is the distrust has just been exacerbated. But the second issue is We now interact less often physically. On average, the number of countries that passport holders globally can travel through to visa-free has fallen by about a third as a result of COVID. Of course, the number of airline flights has collapsed a lot more than that. And if you're a US passport holder, the number of countries you can go to visa-free has fallen by 50%. There's a lot of evidence that when different cultures don't mix physically, that suspicion and intolerance just naturally ferment to kind of fill that gap, right? So I just can't see COVID, unfortunately, doing anything but making this geopolitical landscape even more complicated. That makes trade more complicated. And it's another reason I think governments just think more carefully about what are my critical supply chains and how can I be sure I'm comfortable with where they're sitting.
Yeah, thank you. And I guess sort of related to that, I've got a question around opening of borders. And obviously government modelling that would have underpinned the budget may have been relatively, well, it was actually quite conservative in that regard. How sensitive do you see the economy and I guess the recovery of economy being to that reopening of borders? Again, talking to a group of people that are potentially Australian operating in geographies in the region. How sensitive do you see the Australian economy being if those borders open? Obviously, tourism is one sector where there's a direct impact.
But yes and no, Chris. I mean, tourism, foreign tourists tend to come to the CBDs and the Great Barrier Reef. So Cairns is definitely worse off. Sydney's worse off. The Gold Coast is worse off. But if you go outside those main tourist centres, actually local visitors are very, very strong. You can't get a house at Byron Bay at the moment because everybody wants to go there. So I'm in Australia's case, look, there are sectoral impacts, no question. If you're in the university sector, you really want the borders to open. If you own certain hospitality assets, you really want the borders to open. In a national sense, do I think opening borders is radically going to change things? Look, I think it's just part of the evolution of getting back to some sort of normal. It's not the thing. I mean, if we were talking about Thailand, where tourism is such a big part of the economy, I think Thailand had 20,000 Chinese tourists last year. It just got its first plane load since COVID. I think 39 arrived. It's a much bigger deal for Thailand than it is for Australia, I think.
And I guess on a positive note, which industries do you see or foresee to benefit the most in during COVID or a post-COVID world?
Look, technology clearly is the thing. It was already a trend before. It's just been completely supercharged by what's gone on with COVID. So, look, partly right place, right time. But if you look now, so the 6 large US technology companies, which were already big before this, the 6 large US tech companies alone, their aggregate market cap is bigger than any non-US equity market except China. So just to put that in context, they're bigger than the entire German stock market, entire UK stock market. The medium we're on now has a market cap bigger than some of the US airlines. Tesla now has a market cap than all the conventional motor vehicle manufacturers globally combined now have. That's just been the sector that's done. And then there's the ancillary sectors. NATO's under pressure to spend more on military. Governments are responding to the increasingly difficult geopolitical environment. So the defence and related sectors clearly are stronger. One thing we've seen in COVID is people don't really want to be on public transport. So sales of second-hand vehicles in most countries have been very, very strong. We're going to have to think about that from an environmental perspective, but that's been there. Redundancy in your hospital and medical care infrastructure, right? To what extent did you allow the private sector in there to run it to a very fine degree of tolerance, and to what extent do you just kind of wonder about whether I want to reassess that and think about running that system more differently? What's happened in aged care, unfortunately, in a range of countries raises questions about kind of how you want to think about that sector. Most sectors are going to be affected one way or the other, I think, but technology clearly has been the big winner, as well as a few other sectors,
Okay. I've got quite a specific question, and that is, how have FIRB policy changes recently, how do we see them impacting on FDI in Australia?
Look, at the very least, it has to slow things down. I think one of the things about a fiscal policy-led world versus a monetary policy-led world, I think just the capability of the public sector is going to be increasingly in focus as more of the policy thrust come through the public sector. And I think what's happened with the Foreign Investment Review Board and the shift in regulations there, I think, is part of that. As the processing demands on that organisation go up, I think you'll just see that be an increased focus, and it must at the very least slow things down. It would seem strange if you brought in a policy like that and it didn't at net result in less inflow of capital into Australia. There would kind of be no point otherwise. So slows things down, unfortunately, makes things less efficient, and probably also less capital coming in on balance.
We've probably got time just for one last question, and it's probably quite topical, having come off watching the second or third, depending on how you define it, presidential debate. The question itself actually was who will win the US election, but I won't ask you to answer that. I am interested, however, in your views on a Trump or a Biden presidency, and where you see the trajectory on economic issues as a result of either of those outcomes.
Yeah, look, we're on record as saying, and we've said it for the last couple of months, the odds favour Biden winning. We have used the word odds, and we do give a probability, so we're not saying that Biden will win, because since 2016, I think all of us have learnt elections are not over till they're over. But Trump is not an unknown quantity this time. He's not, and you can't vote for Trump saying, I want to shake up the establishment. You've seen what Trump will give you. And look, I think a lot of people would find it disappointing if he was re-elected. So we expect Biden to win. He'll be quite different. I think he'll be much more conventional in his style of interaction. Trump has found something in the US electorate, though, which Biden is going to have to deliver into. So going back to kind of business as usual won't work either. There won't be a strategic shift on policy towards China. It doesn't look like. It might be prosecuted in a different way, but this idea that the US views China as a strategic competitor, I think that's here to stay. And I think if you tested the water in Washington, that would be the one thing that's consistently held across both sides of politics, between the business sector, the government sector, and the political sphere, is the China competition issue. So that's still there. The tax environment would be quite different in the US, I think. Look, my personal view, I don't think that's a bad thing. I think we do need to think much more deeply about our levels of taxation. In most advanced economies, levels of taxation are the lowest we've seen in my lifetime. I'm not sure that's given us the best outcomes in all cases. And on the environment, he's quite different. I mean, if you want more action on the environment, in a way, the tense geopolitical backdrop is helping in a sense. I mean, it's making it harder to agree things like the Paris Agreement. It's hard to imagine we could rerun the Paris Agreement today, but countries are more likely to hold others to account. So the European Union has already said they will look at a carbon border tax by, don't quote me on the date, I think the beginning of 2022, so not very far away. Biden has also said he will look at taxing the imports from countries that they don't feel are operating in a way that's consistent with their climate objectives. So I think big countries and economic blocs are increasingly looking at holding other countries to account on their climate credentials. And of course, China's made a commitment to make a net zero carbon contribution by 2060, I believe. The Paris commitment is 2050 for the world, but underlying that, there's two principles. One is that advanced economies need to move faster than poorer economies, and the second issue is that whatever your policy announcements at the beginning are, they're going to need to ratchet up over time. So I think they're the differences. They're the main ones I'm kind of focused on.
Thanks. And one last question in terms of currencies over the short term and medium term. So major regional currencies. In general terms, what are we seeing in terms of those rates?
So Asia's had obviously a very strong appreciation cycle the last couple of months. I mean, our forecasts have that persisting. The levels have overrun some of our numbers a little bit, but I think an ongoing global recovery is also consistent with the idea that the economic weight globally is shifting towards this region. And I think, I think there's a global recovery going on. So that's one reason I might sound a bit optimistic. The other thing is, if you were going to choose a hemisphere in which to be, this would still be it. So in a world that's recovering, I think we're also still in the right spot. And look, I think we're kind of fortunate for that regard. And I think those two trends together are going to be enough to give you some more currency strength in this region. We're probably not terribly far away from the point where some policymakers will think that's a bit of a pest. So that might slow some of the rates of appreciation. But I think that trend to me is looking pretty entrenched. And just, around the US, lastly, on the fiscal piece, we could get some sort of stimulus in the next few days. It's going to the wire. If Biden gets elected, we should get something in late January or early February next year. So we might have some weaker data between now and then. But after that, I think Biden will turn the fiscal taps on again.
Thanks, Richard. And again, thank you very much for making yourself available today. I think you've covered a huge number of issues, obviously including the budget, but a number that are off the budget. I really appreciate your time. Also appreciate the attendees. Again, we've got quite a diverse audience across a number of chambers, across a number of geographies. And I think the cooperation across that diversity is great to see. I'd also like to thank Kate and the team at AustCham Korea for organising it. So with that, Kate, I'll hand back to you to do closing.
Thank you. And thank you again, both Richard and Chris, for your time and insights today. It was a real pleasure to facilitate this discussion of the Australian federal budget and its implications with so many business representatives from around the region joining us online.